Hello and welcome from the Nasdaq market site. I'm Jarrett Banks of IPO Edge. Joining me is a return guest, Bruce Goldfarb, President and CEO of Okapi. Bruce, welcome back.
Always great to see you, Jarrett.
All right, let's get right into it. Retail investors continue to be a story out there. How do you think about reaching retail investors?
It is always an important part of any outreach campaign to think about your retail shareholders. When you represent a company in the volatile environment that we have today, where investors are buying and selling based on weird things that happen in the market, there's always going to be a retail component, and they're going to sometimes be exactly in line with the rest of the market, and sometimes they're going to do something very different. But the real challenge and the difference between your institutional investor and your retail investor is that you can count on an institution to vote the shares that they own at the record date. For retail shareholders, it's much less predictable. They may vote the shares that they own. They may not vote the shares that they own. There's a lot of apathy, and our job in the proxy solicitation business is to get those shareholders to vote and support the position of our client.
All right, we've also seen a return of meme stocks with AMC and people like Roaring Kitty. How should investors think about meme stocks?
Well, investors, again, you break this down into a traditional institutional investor and you break this down into the retail shareholder. The retail shareholder seems to think a lot about meme stocks. They buy them, they sell them, they talk about them, they read about them, but they don't necessarily vote their shares when there's an opportunity to take action that way. On the other hand, the institutional investors buy them and sell them, and I'm talking traditional institutional investors buy them and sell them to the extent that they're in an index, to the extent that they have some hunch. And then you have your active investors, you have your hedge funds who will buy and sell these securities, partly playing on the knowledge of what the retail shareholders will do. It's a real challenging market that I'm going to delineate a total difference between the trading side and getting shareholders to act. And here, when we were talking before about what do we do to get investors to respond, if you can't get your retail shareholders to vote in a company that they love, then you can't necessarily get them to vote in a company that they don't necessarily care about, but they love trading. And so the same people who buy and sell may not even own the shares on the date when you're going to trade. And with that in mind, those shareholders need to be thought about strategically by management or another firm that wants to reach out to get them to vote. You need to be very thoughtful about what your message is going to be to these investors and time that message very closely with ownership trends so that you can get them to take action. And then you need to go that extra mile in terms of solicitation. And in terms of solicitation for retail shareholders, that's not just we have proxy materials on which we need you to take action. That is, we're going to call you on the phone, like in the old days, actual phone, not like the phone that you have in your hand, although that's how people use the phone. And that's the challenge in the solicitation business, that there was a time where you could reach people at home on the phone. Now people don't pick up the phone. People won't even answer the phone when it's right in front of them if they don't know who's calling, if they don't know what you're calling about. And people are multitasking. They could be walking the dog and using the phone. They could be on their Peloton and having the phone nearby, but they're not necessarily going to vote. So that means, how else do you get them to act? And you need to make use of social media in ways that had not been done before. And you still need to mail material and make use of email. The key is being diligent, vigilant, persistent, but polite in getting shareholders to vote, and it's still hard.
All right, great. Now we are here at Nasdaq. How do you see the IPO window right now? And do you think SPACs are still a viable way to go public?
Well, SPACs will always be part of the equation as a way for some companies to go public. I think the giant SPAC boom is over for now, but there are still going to be companies that have an attractive prospect through the public markets where a SPAC can be an alternative to the traditional IPO process. But a lot's changed in that respect over the last few years. I mean, among other things, the regulation has changed so that it's harder for a SPAC to de-SPAC than it used to be able to occur. There are environmental challenges in terms of raising money. I'm not an economist. I don't pretend that I know all of the answers as to why windows open or close and when the rate environment changes and what makes certain of the corporate finance mechanisms more or less attractive. But ultimately, there are still going to be good ideas that are going to be run as a public vehicle, and SPACs are a way to get there. Now, the challenges of a SPAC still remain. You end up with an investor base initially who invests and knows that they have the potential where they can redeem their money, which creates viability issues for a company to be ultimately listed. You have challenges that with more regulation in terms of what you need to report to move forward. But it's still going to be a market. I think we're going to get beyond that historic bubble and see that there's SPACs that continue to move through. There's what I'll call a traditional SPAC process, and that's going to remain. It's also an exciting time, I believe, for companies to think again about going public. As we hit these transition points in the election cycle, that's a time where you can start thinking about, as a firm, do I have value? Can I have value to investors no matter what the markets are? And if you can start talking it through in volatile times, you're going to have the opportunity to go out the other end and be traded on the Nasdaq.
You mentioned the election. How do you see the election weighing on the regulatory environment?
Weighs heavy on the regulatory environment, Jared. I mean, nothing can change how we operate more than a change of administration. Right now, without getting too deep into a political discussion, I think we're in an environment where there's a backlog of discussion of a lot of potential regulation. I think it may change if we have a different administration. It may change even if Biden is reelected, because there does come fatigue within the government and people want to change jobs. So it's an unknowable time, but it's going to be a big factor, not only in terms of public company listing, how public companies operate, but whether or not we're going to see more activism going forward, or the level of activism.
All right. What do you think about activists lobbying for relisting of UK companies in the US?
Well, that's an interesting development, and it's a demonstration that activism is a global sport, a global investing style, and it also shows that when investors are doing their research and they're discovering companies that have potentially extra value to be unlocked, and a determination that the regulatory lag that may come from London can impact the value of certain companies. So I think it's a viable argument. Again, there are certain companies that will want to be listed in London and want to remain there, and there are certain companies that it may make sense to say this is a time to rethink what we're doing and how we're doing it. It's all very interesting for us at Okapi Partners, as we'd open a London office at the end of last year, and we are seeing and experiencing that there are companies that are thinking about these issues, and certainly investors approaching them, talking through what can happen. And it all is part of how the world moves quite quickly all the time.
All right, last question. I've got to get your take on what's going on with Elliott and Southwest Airlines.
Well, I don't know that I can say an awful lot about it right now, but as Elliott is a client, and they frequently make very good points about how companies can run more efficiently. Airlines are an interesting business. We've worked on campaigns for airlines and against airlines, and let's see what's coming up here.
All right, we'll leave it there. My thanks to Bruce Goldfarb, the president and CEO of Okapi. This is Jarrett Banks signing off from the Nasdaq Market Site.